Okay. All right. So let's talk about where do we find all these recordings that I'm doing. Okay. If you come back over here to the course homepage, okay, and you come down here on the right hand side under these user links, and you click on My Accounting Instructor YouTube channel. Okay, that's me. All right, and right here under playlist, there's not one out there yet, but under playlist, I will put a ACC120-B225 Fall 2025 First 8 Week playlist out there, and I will start moving all of these videos into that playlist. Okay, so hopefully super easy. Okay, there's no login, there's no password, there's no nothing. Okay, all right, how we doing? All right, so let me just say that one of the ways that I will hope that you will use this resource is things like this. I would rather, there's one thing that you have to understand about learning. You cannot write and listen at the same time. Your brain won't function that way. And it's that kind of thing where you're thinking, it's like, ooh, okay, you wrote something down, and then all of a sudden you looked up and you went, oh crap, I just missed like the last 15 seconds and now I'm lost. Okay? I would much rather you stay engaged in class because I've got this on video. But what you can do to use these videos is like, so for today's class, there will be 2 videos. Okay? And then one will be a part 1, one will be a part 2. I'll put the date on it and everything. But if you're sitting there and you're like, oh, sweet mercy, it's like I was lost. Right over here at the bottom left of the screen, you can see the timer out there. Just make a note of what time the timer said. And then you can immediately go back to the video, fast forward to that one little section, and boom, you're ready to go. Okay, and get the information then. I'd rather you stay engaged in class. Okay, the other thing is this. If, keep in mind that under the content area, under each one of the chapters, so I'm going to go under coursework, unit 1, and I'm going to go and notice. So for each chapter, there's a resource folder and there's an assignments folder. If I click on resources, notice right there at the top, there are the PowerPoint slides. Okay, if you will download those, okay, and then open PowerPoint, and under PowerPoint, when you go to print something, now it's being bashful. Oh, come on. Ooh, finally. So I'm just going to open this one. Okay. So within PowerPoint, just download the file, open it in PowerPoint. It is in that native PowerPoint format. Okay. So I will tell you, you need to understand how to use Word, Excel, and PowerPoint. Everybody has hounded me for over 20 years on, you need to PDF all that stuff. I'm like, nope. Because you need to learn how to use those files in its native format. Okay? So there's the PowerPoint. Come over here to File. Click on Print. You do not want to hit Print from here. Okay? Come up here. Now, whether you want it in black and white or color, that's totally up to you. We do want all slides, but right here where it says Full Page Slides, hit the drop down, and the one that I want you to choose is this one right here that says 3 slides. So if you are a real note taker, then I suggest before you come into class, before you watch the videos and stuff, print these PowerPoint slides, because this is what I'm working from, okay, when we're doing the lectures. Download those. You've got all the information that's on the slide. You don't need to write down what's on the slide. What you need to write down is maybe an example that I give that helps you remember the content on the slide. Because I will tell you a lot of stories, okay, as examples, okay? So that's the best way to do it. Don't try to write down everything that's on a slide. That's a complete waste of time. You've got that information, okay? Any questions there? Okay. Right here at the top, you should click on the little hamburger and click download. That should download the original file format. Yes? Yes or no? Oh, okay. Okay, so accessing assignments, okay? There's two ways to do this. From the course homepage, you can come over here and, for instance, right here where it says Chapter 1 SmartBook Due, you can use the calendar over here to click on the assignment and go directly to that SmartBook. Okay, it'll go there and then just click right there on the blue. Okay, now you're going to be tempted to live there on that calendar. If you do, you are going to miss a lot of material, because those chapter resource folders that are right here under the content area. So just remember, the other place to get to everything is through coursework, whatever unit we're in, and under each unit you've got a chapter resource folder and you've got an assignment folder. All that's in the assignment folder is just the assignments, and again, that takes you right directly to Connect. Okay? The resource folder is what you're going to miss if you don't, if you live on that front page on that calendar. Okay? So you're going to miss a lot if you don't do that. All these little lab work and static exercises and all that kind of stuff, all these little things that look like they have Lego items out here on the left, all practice. Okay, so I have pushed every single thing to you. So some of you are going to need all of it to really get a good grade. Some of you are going to be like, yep, nope, I'm good. Okay, but let me also say this. Don't get frustrated. Okay, come see me. All right? Because there's usually one time, the way accounting works is that it's like the previous answer you're going to use to pull forward to get the answer for the next thing, and then you're going to pull it forward to get the answer to the next thing. Are you following me? So by the time you get 5 rows down and on 5 calculations, you may have made a tiny little mistake back here on step 1, which then completely threw off steps 2 through 5. And now you're sitting there and you're like, I thought I knew how to do this. And I got a 0 on the answer. And I'm sitting there and I'm going, well, I know exactly what you did. And I'm not frustrated at all. Okay? So I promise you, don't get frustrated. If you do, close the assignment, computer, whatever, unless it's a quiz, because remember, you've got to finish the quiz once you open it. So I kid you not, sometimes it's better be lucky than good. If you're just to a point on a quiz where you're like, I got nothing else, C. Do not leave content blank. That's just throwing it away, okay? So we can figure out what's wrong. And 9 times out of 10, if you come to me and you go, yep, this ain't working, and I'm all frustrated and aggravated and everything else. And I look at it and I go, okay. Takes me about that long to figure out what you did wrong, okay? Only because I've got a lot more practice at this stuff than you do, okay? That's it. Doesn't have anything to do with me being smart. It has to do with how long I've been doing this, okay? So if you get frustrated with something, put it down, walk away, go wash the car, or go to the mall, or whatever. Do something completely and totally different. And I guarantee you, probably half the time you'll walk away from it, and whatever you're right in the middle of doing something, you're like, oh, God, I added rather than subtracted. Little things like that, okay? That you think, you have no idea what you're doing. I'm like, nope. That was an add rather than a subtract. It's easy stuff like that, okay? Anybody can do accounting. All right, so let's start. So if you want to, go ahead and download that PowerPoint or just follow along, because actually, hang on one second. I actually want to go to the ebook because I want you to see how this book is set up. So I'm just simply going to go to the Smart Book assignment. And nope, it's not going to let me do that. Okay, well, hold up. All right, so this is what you will see if you hit that Connect section home. This is what you should see, okay? Out there from the actual home screen, I think it looks about the same for you guys, but the ebook is just over here on the right-hand side. I'm going to launch the ebook because I want to show you how this book is laid out, because right now my husband he's a lovely person, but his voice is in my head going, don't forget to tell them why they care. Okay? All right. So we're going to go through chapters 1 through 10. Okay? Now here's the pattern. And in accounting, you need to learn to recognize patterns. You do not want to try to take this as memorizing specific transactions. It's about patterns and recognizing those patterns and applying that same logic to different data, okay? So we're going to go chapters 1 through 10. So notice what happens here. We're going to start on chapter 1, and it says Business Decisions and Financial Accounting. So in chapter 1, we're going to learn the big thing that we need to get out of chapter 1 is we have 4 financial statements. What are they? What's on them, and how does it get there? Okay? So we start kind of with the end result of financial statements. Okay? That's chapter 1. Chapter 2, we're then going to back all the way up. So in chapter 1, we learned the end. In chapter 2, we're going to back all the way up, and we're going to start looking at specific transactions that only affect the balance sheet, which is one of the financial statements that we're going to talk about here in a minute. We're going to back all the way up, and we're going to start looking at transactions. Okay? Chapter 3, we start looking at transactions that affect the income statement. Okay? Then in chapter 4, now we're at the end of a month, so think chronologically. So chapters 2 and 3 are just kind of day-to-day operations in the accounting department. Okay? In chapter 4, we are now at the end of a month, end of a quarter, end of a year. Now, what do? Because there's some additional, processing that we need to do to get the numbers for the financial statements correct. Okay? Now, here's the good part, and this is where, big piece. Chapters 1 through 4 typically feels like completely brand new information. But when we get to chapter 4, just know that we have completed the entire accounting cycle. We've learned all the different financial statements. We've learned what's on them. We learned how does that information get there. And, you know, what do we do at the end of a month, end of a quarter, end of a year so we can produce external financial statements. And now in Chapter 5, we're going to start looking at we're going to start going deep. So now we're not necessarily learning anything completely new. We're just going deep on all the different individual items that are on the balance sheet. So we're going to work our way down the assets. We're going to just flip over to the liability section. And so assets are chapters 5 through 8. And then chapter 9, we switch over to liabilities, which we're going to talk about here in a minute. Chapter 9 is also assets, sorry. So 5 through 9 are all assets, just different types of assets and categories of assets. And then chapter 10, we're going to switch over and talk about liabilities. Who do we owe? Why do we owe it? How much do we owe? Okay? So here's the big thing. I promise you, if you will really put the time in to really get chapters 1 through 4 down and ask questions and get your answers and everything, chapters 5 through 10 are going to be, they're not going to be bad at all. But if you halfway do stuff, chapters 1 through 4, once we hit 5, you're going to feel like somebody just threw you into the deep end of the pool without a life vest. Okay? Trust me on this one. Chapters 1 through 4, whatever you got to do, make sure you get that information. Okay? And ask questions. Because I promise you, you're all facing me, and one person will ask a question, and I will even read. I mean, again, I'm telling you, that little wrinkle right there between your eyebrows tells me a lot. And it's like you're going to think you're going to hide out, and I'm going to be like, you look like you have a question. and here's the thing. When she asks her question, there's like 3 other people in the class that went, it's like, I'm so glad she asked. I didn't want to. I'm so glad she asked. Okay? So if you've got a question, somebody else, I guarantee you, at least one other person in the class has the same question or something similar. And maybe I just need to describe something a different way. Okay? So this is a conversation that we're going to have in class. It's a two-way street. Okay? If you make it into a one-way street, we're going to have problems. Okay? All right. So let's see. 410? Right? Okay, 410. All right, we're going to get it. All right, so, again, chapter 1, business decisions and financial accounting. All right, so what we're going to focus on in here is producing external financial statements. Internal information, that's 121. You'll do that next semester, okay? So, various organizational forms and business decision makers, all right? We got a couple of different organizational forms because each one of these is concerned about different things. Number 1, we've got a sole proprietorship. That means sole, one, right? One person owns the whole entire company. The big issue with sole proprietorships is that there is no legal differentiation between the person and the company. Which means if I am a plumber and I go out and I fix somebody's plumbing at their home and something happens and what I did didn't hold and suddenly the next morning their house is flooded and I'm a sole proprietor, that means when they sue me, they not only sue my business, but they sue me personally, and now my home, my cars, and all of my personal assets are at risk. You with me? Okay, that's a big deal. All right, partnerships. Okay, partnerships just means there's 2 or more people. Partnerships, accounting firms are massive partnerships. They're worldwide businesses, but they are partnerships. Okay, you've heard, a lot of legal law firms. They're partnerships. You heard, oh, they're on partner track. They are actually partners. Okay, now the deal is with partnerships is this. Every partner is personally liable for all the debts of the business. That means that if I go into business with someone else and they mess up and screw up somebody else's stuff and they don't have any money, guess who they're coming after? Me. Okay? So again, when you go into business for a partnership, you better make sure that your partner is trustworthy. Okay? Now, a corporation, that's where we own stock in a company. So if we all decided to go out and buy stock in Walmart, Target, General Motors, Ford, whatever it might be, the only thing that we have at risk is how much we paid for that stock. So, what was it? Several years ago, Toyota ended up with some kind of issue where, and it keeps coming up periodically, and I think it's just a pile of hooey. It's like, my car just unexpectedly flew through the intersection and nothing happened. I didn't do anything, and now I've had a wreck, and it's got to be Toyota's fault or Ford's fault or whoever it might be. Now, y'all, it's called an emergency brake. Cars don't function that way. So I don't know how that works. I don't know who messed that one up, but that's just crazy. Okay? But the point is that if those folks who were in those car accidents and stuff, if they sue Toyota and we own stock in Toyota, we don't lose anything other than, assuming Toyota doesn't go out of business, we might lose a little bit on the value of our stock, but the most we can lose is maybe the $100 or $1,000 that we bought the stock with. Okay? But they can't come to us and go, we're going to sue you personally. That doesn't happen. So that's one of the big things that's great about corporations, is that no longer are the owners personally liable. The company is liable. Okay? So here's a nice little visual on, percentage-wise, who owns what. 72% of companies are sole proprietorships, which tells you what? A lot of liability, and most companies are in what form? Sole proprietorships. So again, remember, it's easy to start a sole proprietorship. It's like, I think I'm going to start my own business. I don't think I'm going to do that anymore. You add an extra form to your tax return at the end of the year, and that's it. Okay? So numbers-wise, number of different businesses, most are sole proprietorships. Okay? Now, the larger businesses are mostly corporations. Okay? Now, an accounting system, we've got three things that are going on within an accounting system. We've got operating issues, we've got investing issues, and we've got financing issues. Okay? All that data and everything goes into that system, and we get a couple of things out. We get financial reports of external financial statements and managerial statements. Okay, managerial, that's next semester. Financial is this semester. Okay, so the managerial, that's the data that we're going to use to run the company. Okay, we're going to get tiny down into, are we making money while we're producing this product? Okay, how much do we need to charge for this product? Okay. External financial statements go to creditors like the bank who we borrowed money from, or investors, people that want to buy our stock or our bonds or whatever it might be. Okay, we provide them with a set of financial statements and they say, yeah, looks good, or no, I'm going to pass. Okay, so what's the purpose, structure, and content of the basic financial statements? Now, I'm going to give you some tips here. Pull out a sheet of paper. This is the beginning of your cheat sheet. Okay? The more you use this, eventually it will just become second nature to you, and you won't have to worry about it anymore. Okay? So take this sheet and periodically I'm going to say, all right, pull out your cheat sheet. So don't put anything else on this page other than this kind of stuff, okay? So first, the basic accounting equation. Hold up. Don't put anything down yet. I'll let you know when you need to write, okay? So the basic accounting equation is just simply this. Assets equal liabilities plus stockholders' equity. You actually know this logic from typically home ownership because it works like this. If you buy a house that was $100,000 and you made a $20,000 down payment on that house, you now owe how much? $80,000. Okay, so $100,000 is the house, the asset. The $20,000 is the equity you have in the home, and the other $80,000 that you now owe is the liability. You see it? That's just the simple logic of how this particular equation works. Now, this equation has to balance every single time. If it's out of balance, it tells us we missed something. Okay? So hold up. All right? So, separate entity assumption. That means that business transactions are separate from the personal transactions of the owner. Okay? Even if it's a sole proprietorship. Okay? But it's like if you and I buy Walmart stock and we go buy a car, that has absolutely no effect on Walmart at all. If Walmart goes off and buys, opens up a new store, that has absolutely no effect on our finances at all, other than the fact that our stock price might go up. You with me? Two separate legal entities, and those things don't get combined. Okay? All right, so what is an asset? Okay? Company, now, let me just say that they come up with these long descriptions and everything. Okay, so this one is an asset is a company's present right to an economic benefit. Practically speaking, assets are a company's economic resources. Stuff. Stuff that holds value. So we've got things like cash, like bank accounts, petty cash, currency on hand, the cash that's in the cash register drawer. We've got equipment. So maybe we've got, okay, they don't have that on there. All right, but equipment could be things like computer equipment. It could be construction equipment. It could be automobiles, okay, things like that. But these things, they hold value for long periods of time, okay? We've also got software. Now, we can't usually see software, and we're going to talk about software in a later chapter, but software is just zeros and ones, right, on the hard drive on this machine, okay? But it has value, okay? Supplies. Now, there's two different ways that you can look at supplies. So, at Central Piedmont, supplies would be things that would go in the office supply closet, like printer paper, pens, pencils, ink, things like that, right? That we're actually going to consume while we use them, right? That pencil's not going to last forever. Those erasers aren't going to last forever. That, once we send that piece of paper through the copier, it's done, right? So supplies are things that we sort of consume. If we're looking at it from a manufacturing perspective, it could be something like a 50-gallon drum of lubricant that we use to lubricate the production machinery each month. But as we use that lubricant, we are consuming it. You with me? So supplies, we're going to consume those. Okay, and then we got buildings. I think that's kind of gimme, right? I mean, it's a building. Okay, and it lasts for many years. Okay, so those are some ideas of some assets. There's others, but we're not going to get into those just yet. Liabilities. Liabilities are easy. What do we owe and who do we owe? Here's going to be the hardest thing about liabilities. Sometimes owing somebody something doesn't mean you owe them a payment. Sometimes it means you owe them a service or a product. Okay? So typically when we think about liabilities, we think, how much do we still owe on that car payment? How much do we still owe on that mortgage? And it's about how much cash or currency do we owe them. But sometimes, like if I walked into your business and I said, here's $100, I want to order X product, and you said, yeah, sure, we can do that. Now you actually have a liability on your books because you now owe me the product. So once the product comes in, you get me the product, and now you're settling up the liability by providing me with the product or providing me with the service that you promised. Okay? So we've got all kinds of things, notes payable, accounts payable. We'll talk about all the different types of these. Notes payable is things that you owe to the bank. Like it is a document that says the payment is due on such and such a date, this amount, this interest rate, etc. Accounts payable is just basically things where you've gone to different places. Like if we go over to Office Depot and we buy something, we say put it on our tab, they kind of expect to be paid within 30, 60, 90 days. Okay? So you're just sort of running a tab with another business. Okay? Salaries and wages payable, those are specifically wages that you owe your employees. And taxes payable, there's all kinds of taxes. We'll get to that at the end of the semester. Okay? Income taxes, sales tax, employment tax. Okay? All right? And then you've got stockholders' equity. There's two pieces to stockholders' equity. You've got stock that you've issued, which is the common stock, and you've got retained earnings, which is the retained or kept profits. Okay, we'll talk about that more in a later chapter. All right? Okay, so there's the first equation there. Assets equal liabilities plus owner's equity. Owner's equity has two pieces, common stock and retained earnings. Okay, so make sure you get that one down. Okay, I'm going to show you another one here in just a minute after we talk about it. So if you don't get it now, that's okay. All right, then we've got revenues, expenses, and net income. This is that retained earnings piece of stockholders' equity. Okay, revenues are what we earn when we sell the product or sell the service. Okay, so if from the customer's perspective, it's like if you go into Belk and you buy a $100 Tommy Hilfiger men's dress shirt, right? They earned $100. Okay, that's revenue. So in that case, you're selling product. A plumber who bills you $100 for their time, they're earning revenues because they sold you time. Okay? Then the expenses. That's all the costs that it takes to earn those revenues. Whether it be that Tommy Hilfiger shirt we bought from Tommy Hilfiger, because again, we're Belk. We bought the Tommy Hilfiger shirt for $50. We sold it for $100, so we made $50 on the shirt. You with me? Okay. Also, other expenses would be things like we came in, we flipped on the lights, and we had to pay Duke Power. During the wintertime, we turned down the thermostat or turned up the thermostat, heated the building, and now we owe Piedmont Natural Gas. Okay? Wages are another thing. Advertising, right? Because if we don't advertise, we don't get customers. Insurance, right? We have to pay the insurance company to insure the building just in case something happens, right? Maybe we have to rent the building. And then office supplies that we have used. So that paper that went through the printer and we're not going to record it at this depth, but the ink that we used, right? Yes. Yeah. Yep. We're talking about all these things first, okay? So let's look at a couple of things. So now we're just establishing the data that we're going to be processing. Then once we actually process it, I'll have you write it down. We've got another item that hits retained earnings. It's a concept called dividends. Okay? Now, dividends are basically, if we have stockholders in our company, just realize that there's two ways that those stockholders get their money back. Hopefully, stock price goes up, or we pay them dividends. Okay? So when somebody buys our stock, it's not free money. We have to provide them with some sort of return. Otherwise, they're not going to invest in our company again. And dividends are kind of what I think of as the thank you for letting us use your money. Okay? All right? Now, a couple of things to note is that dividends are not an expense. All right, so now, here's what you need to start writing down. So that's the data that we're going to process that we just went through before. Here's the order in which those financial statements need to go. So hold up. Write down income statement first. Okay? The equation for an income statement is revenues minus expenses equals net income. Okay? So here's an example of an income statement. Now this is just a detailed income statement. Okay? So let's go ahead and let's start learning things the right way. Here is an example of an income statement. It starts off with the company name. The second line is always the name of the statement. And then the third line is the date of the financial statement. Now notice on an income statement, the date says for the month ended September 30th. So when did this information start gathering for this financial statement? What day? Good. September 1, right? Because it's month ended. Okay? So we've got revenues here. We're going to do some big picture, and then we're going to work it down. We've got revenues. We got two different kinds of revenues. Then we're going to total the revenues. So here we have a total of $12,000 of revenues. All right. Notice there's two kinds. There's sales revenue and there's service revenue. So what's the difference? Sales revenue is when we sell product. Service revenue is when we sell time. Okay? We have to keep those separated so that we can tell. It's like, so if we pull out sales revenue, we're looking at, okay, how much do we bring in based on product? And then service revenues, how much do we bring in based on time? All right. Another thing to note under revenues is notice we've got a dollar sign up there. So that tells us that we're using the US dollar for those financial statements. We could be using another currency. So make sure you pay attention to the currency. Notice under the total revenues, we have one line above and one line below. That indicates a subtotal for those revenues. Then we have expenses. So we list out the expenses. Okay, we total the expenses. Again, single line above, single line below. So we have a subtotal for expenses. And then we take the $12,000 in total revenues minus the $10,000 in total expenses to get to $2,000 in net income. Okay, big picture. With me? Okay. Now, what order are these revenues and expenses in? Okay, except for? Good. So highest to lowest. The only exception is income tax. Income tax always goes at the bottom regardless of how large it is. Okay? So we start with whatever's the largest number and work our way down. Good. Okay? So there's your income statement. That's the first thing you're going to write down. Income statement, revenues minus expenses equals net income. And again, That is, cross fingers, net income, because you could have more expenses than you have revenues, and then you'd have what we call a net loss. That's bad. Okay? All right. So, we already talked about monetary unit. All right. So now notice what happens here. That $2,000 in net income, we now pull over to the next financial statement. So write this one down. Retained earnings statement. It's allergies, I promise. All right. So the formula for the statement of retained earnings or retained earnings statement, either way is fine, is beginning retained earnings, add net income, subtract dividends to get ending retained earnings. Okay, let me repeat that. Beginning retained earnings, add net income, subtract dividends, equals ending retained earnings. Okay? So that $2,000 that we just calculated on the income statement now gets pulled over to the statement of retained earnings, right there on the second line. In this particular case, this is a brand new company, so we had nothing for a beginning balance. Okay? We add the net income, and we paid $1,000 out in dividends, which is the only place that you'll see dividends is on this retained earnings statement, to get to $1,000 in ending retained earnings. Okay? Now, if we did, now understand, now this $1,000 gets pulled forward to next month. And if we did the exact same thing next month, then the balance in retained earnings goes to $2,000. If we did it for a third month, it would go to $3,000. Then it would go to $4,000, $5,000, $6,000. You with me? So understand, this retained earnings statement keeps a cumulative balance of beginning retained earnings, add net income, subtract dividends, roll forward to the next month, add net income, subtract dividends, roll forward to the next month, add net income, subtract dividends. Okay? All right? Third financial statement is the balance sheet. That's what this is a reason why I didn't want you to write anything down yet. This is what we started with when we started talking about the data a couple of slides back. But the balance sheet is the third financial statement, because that $1,000 that we just calculated on that retained earnings statement gets pulled right here to stockholders' equity. Right here. So you see how that works? We have to start with the net income, calculate that. That net income gets pulled through to the statement of retained earnings. That statement of retained earnings, that balance gets pulled through to the balance sheet. So the balance sheet is the third financial statement. That's the one that's assets equals liabilities plus owner's equity or stockholders' equity. Either way you want to describe it is fine. That owner's equity has two pieces, common stock and retained earnings. That retained earnings statement is what we're going to keep track of right there under that retained earnings balance right there. How we doing? Okay, now let's back up one little thing here. All right, so remember, back here, income statement was 4-month ended, right? We get to statement of retained earnings. That's a 4-month ended as well. So it also started on September 1. Look at the date on the balance sheet. It's at a specific date. So it's a little bit, because understand what's happening here for the balance sheet. The balance sheet date, and that at actually implies that that is at the end of business day on September 30th. So basically that cash balance, that's what we got in the bank at the end of the day. Accounts receivable, that's what all of our customers owe us at the end of that day. The supplies, that's the balance left in the supplies in the closet. You with me? Okay.
What should I be writing down on this page?
Just the assets equal liabilities plus stockholders' equity. Okay. And then the stockholders' equity, 2 pieces. What you got? Let's share with the whole class so we can all benefit. Yes, and we're going to talk about that. So if you want to play with this a little bit, because again, acronyms are really helpful, ALLO works. Assets equals liabilities plus owner's equity. So the word ALLO, A-L-O-E, works. Do what? You can come up with whatever you want to use is fine. Okay? I use ALLO. Owner's equity, stockholders' equity, either way, it's equivalent. All right? But understand what's happening here. When you get to total assets, notice what happens there, though. Well, a couple of things. What order are these in? I'll just tell you, you're not going to get this one. But do you see that these are listed in a different order? You remember the last ones were listed largest to smallest? Good. Liquidity. Good. So assets are listed based on how close they are to cash. So we start with cash, and then the next thing is what else is closest to cash, and then a little bit farther from cash, a little bit farther, a little bit farther. So notice what happens there. So accounts receivable, that's what our customers owe us. They ought to pay us within 30, 60, 90 days. The supplies, that's usually somewhere between 3-4 months maybe. Equipment, that's probably 4 or 5 years that we're going to be using that equipment. Software, another couple of years that we're going to be using the software. If we had a building, that's a 30-year asset, right? So the farther away from cash they get, the lower they are on the list. So when we get to chapter 5, we'll start at the top of cash, and we'll start working our way down, and we'll start going deep on that list. Okay? Same thing here under liabilities and stockholders' equity. So and under our liabilities, accounts payable, what gets paid first. So what's closest to leaving the company as a payment. That's going to be accounts payable. Again, that's what we owe other people 30, 60, 90 days. And the notes payable is something like, a couple of year loan on a car or a mortgage or something like that. That's going to be a couple of years. Okay? Stockholders' equity is always going to be common stock. That's how much stock we've issued, and retained earnings. How we doing? Okay? So for all of you folks out there that just really love to do things, your own way, sorry. It has to be done in this order. Okay? Also notice we've got a single line above, double line below for total assets. That's a grand total. Notice liabilities are single line above, single line below. That's a subtotal. Stockholders' equity, single above, single below. That's a subtotal. And then the $36,000, single line above, double line below, grand total. Okay? So this is all, so when you're looking at all your financial statements and everything, anytime you look at anything, that's the format. All right? Any questions so far? All right? Let's look at the fourth financial statement. The fourth financial statement is the statement of cash flows. So now, think about what we've done. We put together our income statement. We put together our statement of retained earnings. We got our balance sheet. Our balance sheet balances, so we know that our balances are correct. If our balance sheet was out of balance, that means we screwed something up. Okay? Now, when we get to the statement of cash flows, notice what we've got down here at the bottom. The $13,000. That's the number that we're shooting for because that number came from right here on the balance sheet. So we're trying to prove that $13,000 number. Now again, this was a brand new business, so we had no cash to start, but we finished with $13,000. So then here's the question. how did we get that $13,000 in cash? Okay, so we've got 3 categories. We've got operating, investing, and financing. Now follow me on this because it's like, this, I kid you not, this is probably the more difficult of all 4 of the financial statements. When we're talking about operating activities, we're talking about collecting revenues, and we're talking about paid expenses. On the income statement, back here, we're talking about earned revenues and incurred expenses. So we may have earned $12,000 in revenues, but we've only collected $9,500. You with me? Okay, so this is a little bit like an analysis of our bank register. Okay, so collected revenues, paid expenses is the operations, net income. Okay, all right. Then we've got investing activities. Now, when we're talking about investing activities, we're talking about either taking cash and turning that into some kind of long-term asset, or we're taking the long-term asset and turning it back into cash by selling it. Okay? In this particular case, we used cash to buy equipment and software of $20,000. Okay? So in this particular case, we actually paid out $20,000 to buy equipment and software. Okay? When you start reading chapter 1, just realize that chapter 1 is walking you through this whole entire problem with much more detail. Okay? So don't miss reading chapter 1. Okay? All of this will make so much more sense. Then we've got the cash flow from financing activities. Now understand, when we're talking about financing activities, we're basically talking about money that is either going back and forth from the bank in the form of principal on a loan, like if we borrowed $100,000 and we paid back $100,000, right, to the bank, or we went to our shareholders or our stockholders and got it from them. Okay, so either they bought stock and money came in, or we bought stock back from them and money went out, or we paid dividends to our stockholders. So when we get down here to financing activities, think back and forth from the bank, but no interest, or back and forth from the stockholders. Okay, so in this particular case, we've got, we issued stock, so we got $10,000 there. We paid dividends back to the stockholders. That was that $1,000 that was showing up on the retained earnings statement. And we borrowed $20,000 from the bank. How are we doing? So each group, so operating activities increased our cash by $4,000. Our investing activities decreased it by $20,000. And our financing activities increased it by $29,000. The 3 of those net together increased cash by $13,000. How are we doing? This is one you're probably going to have to go back and take a look at this one and sort of trace it through. Okay? All right. Notes to the financial statements. Let me just say that when you go back, and we won't do it today because we don't have time, but eventually we will pull out a set of financial statements. Most financial statements, no matter how large the company is, the numbers are probably somewhere between 4 and 6 pages, but the notes to the financial statements can be upwards of 100 pages of notes explaining how we got the numbers. Now, how many of you have taken Business 110? Okay. Now, one of the things y'all looked at was financial statements, right? Pretty sure y'all looked at financial statements in Business 110. But I always bust them because I'm like, y'all don't ever talk about or even mention the notes to the financial statements. Y'all just look at all the numbers and y'all, want to calculate all these really cool ratios and everything. It's like, well, that's great, but you don't really know what you're looking at until you read the notes to the financial statements, especially the first note of every set of financial statements, which is called Significant Accounting Policies. Okay? So they're going to tell you a lot about the logic that they used to get to those numbers that were on those 4 pages. But a set of financial statements, you know, that quarterly report that comes out, probably half of it's marketing, half of it's notes to the financial statements, and out of, 250 pages, it's 6 pages of actual financial statement numbers. Okay? So, something to consider there. All right? Here's just the relationship. They're showing you just a little bit more of the relationship here, right? We started with the income statement. That $2,000 flowed down into the statement of retained earnings. Then that ending balance on the statement of retained earnings flowed over to the balance sheet. And then that number that we had on the balance for cash on the balance sheet is now the ending balance on the statement of cash flows. Okay? So that's how it all flows together. So, don't let this freak you out. There's 6 pieces to this puzzle. The problem is one, you don't know what the puzzle's going to look like. So it's not like, when you think about when you put a puzzle together, right? You dump it all out, and the first thing you do is you pick all the edge pieces, right? We don't know what the edge pieces are. So you've got to manipulate, and you're creating the puzzle, okay? And sometimes this piece gets a little bigger, and sometimes this piece gets a little smaller, and sometimes this piece looks pretty good, and sometimes that piece doesn't look too great, okay? And you got to know whether it's right or not, okay? So how are financial statements used? All right, now think about a couple of things here. We're running short, but that's okay. So one, creditors. That's people that are giving us money, okay? So is the company generating enough cash to pay what it owes? Well, if we want to know all about cash, we go to the cash flow statement. That's SCF, Statement of Cash Flows. Does the company have enough assets to cover its liabilities? That's the balance sheet, because you got assets equal liabilities plus equity. Here's the trick. This one right here, does the company have enough assets to cover its liabilities? That's kind of a, if everything hits the fan scenario. Could we sell off the assets, and how much are we going to get back on the loan that we made? You with me? Okay. Investors, what do they want to know? Okay, first of all, what they want to know is what is the immediate return through dividends, right? Remember, all they can do is, so if we buy stock in a company, either our stock price goes up or the company pays dividends. That's how we get our money back, okay? That's how we get a return. So if we want to look at the immediate return, we're looking for dividends on the statement of retained earnings. What's the long-term return? Well, remember, this is one of the important things about why an income statement is so important. Net income drives stock price. If net income goes up, stock should go up. If net income goes down, stock price goes down. Okay? So if we want to know what's going on, then on the long-term return, we're going to look at the income statement. Okay? All right? Useful financial statements, all right? Couple of things to note here. One, the United States uses what we call U.S. GAAP, Generally Accepted Accounting Principles. The organization that establishes GAAP is a organization called the Financial Accounting Standards Board. We are the only country in the world that uses U.S. GAAP. Now, you'll probably hear this a lot. Well, y'all are the only ones that use that, and you just might as well just jump on board with all of us. Okay, well, that's really kind of, I don't know, I hate to use the word misinformation, but everybody acts like or wants to act like all the other countries in the world use a standard accounting system, which is called International Financial Reporting Standards. The organization that establishes international financial reporting standards is the International Accounting Standards Board. they might have kind of a general idea of how everybody's supposed to implement their accounting policies, but depending on what country you're in and what regime is in or is in power and everything else, those accounting standards change. So it always, sorry, it's going to annoy me because everybody's like, well, we're all doing it the same way. Well, no, you're not. There's hundreds of different ways to implement international standards. And depending on what country you're in, it's implemented a different way. It is not one standard. Okay? U.S. GAAP is much more also. U.S. GAAP is much more conservative. We'll talk about those differences later. Okay? Other things, that the information needs to be useful. It needs to be relevant. So we're not including any of our personal information in on those Walmart financial statements. It needs to be a faithful representation, so it's as good as we can get it. It needs to be timely. So if we're looking at our year end is December of 2024, we probably should have produced our financial statements by about the end of March of 2025. Okay. Verifiable. So if I come in and I tell you that, the number on this particular asset is 50,000, somebody else should be able to come in and look at the same thing and go, yeah, that looks pretty good. 50,000. Okay, so multiple people, multiple places get the same thing. They need to be comparable. Now, what this means, because one of the other classes that I teach is Intermediate 2. When we're talking about comparable, we're talking about compared two different ways. One, it needs to be comparable from year to year within the company, and it needs to be comparable across the whole entire industry. Okay? So like you could compare Home Depot and Lowe's because they're, roughly the same size, roughly the same approach to business, right? And you could look at one and compare it to the other and go, across the industry, Home Depot's doing better, Lowe's is doing better, whatever it might be. But you couldn't take on a comparability, you couldn't take a company like Lowe's and compare it to a small local lumber yard that is a sole proprietor and go, well, Lowe's is doing much better than you guys are. It's like, well, not necessarily. That's not comparable. You with me? Because it's a totally different size and business approach and everything else. Okay? So it's got to be comparable within the company year to year and across companies. Okay? So everybody needs to be using the same approach. And then they need to be understandable. Now, understand this. It is, when they say understandable, it means that someone who has had some training in accounting and finance can read them. It doesn't mean that Joe Blow off the street should be able to open up a set of financial statements and be able to analyze them. That's not what that means. Okay? All right. So, ethics. Understand the difference between ethics and morals. Ethics are those things that are right and have been since the dawn of time. Morals change based on time, location, culture, okay? So, and let me just say, I don't say this in a negative way, but if you're planning on going into the accounting industry, you need to be ready. You need to know exactly what you're doing, and you need to be ready to leave if somebody asks you to do something inappropriate. Because they will. Because, no offense, the CEOs of the company are usually coming up through the marketing department. And they've had 2 accounting classes in their lifetime. Accountants have like 15 accounting classes and certifications and everything else. So just be ready for that. Public companies, this whole thing of going public, the big thing is that it gets a bit more expensive to go public. Press releases, now we've got additional, legislation and governmental regulations and everything else that we have to comply with. Data visualization, again, this whole thing of if you're thinking about doing some kind of data analytics or computer science or something like that, knowing what the accounting department is doing is huge. So I had a student, probably going on about 4 years ago now. I meet you guys in all kinds of different places, and I shop at the same Publix where he used to work. He's now out in the business world and everything. Well, I had him for accounting. He was headed over to UNCC, and he was like, I think I'm going to do IT. I was like, awesome. That sounds great. Well, so I'm at Publix, I don't know, maybe 6 months or a year or so after he left here. And he said hello, and I said, well, how's it going? And he was like, I'm in intermediate accounting 2. And I was like, really? I said, I thought you were majoring in IT. He was like, I am. He's like, IT folks at UNCC have to take accounting classes because accountants create a lot of the data that IT produces and uses to make all these data analytics cases and things. Okay? So just want to warn you, if you're sitting there and you're going, nah, I'm going to go IT, I don't need to know this accounting stuff. Oh, just wait. Okay? All right. So before next time, make sure that you complete your Chapter 1 Smart Book. That's due tomorrow. And then on Wednesday, we're going to work on some Chapter 1 static exercises and problems. Make sure you open up your homework and look at the problems, read through the problems for the homework, okay? Because then when we're working through the stuff in class, you're going to be like, oh, I recognize that, okay? All right, have a good one.